One market watcher we know sees upside in Uber caps through the end of this year. His name is Chris Harvey, and he's the head of equity strategy at Wells Fargo Securities. Chris, welcome.
Thank you.
Uber caps. Who are they? Why do we like them?
So Uber caps are the largest stocks in the S&P 500. Usually what we do is if we're using an index, it's a Russell Top 50. Why do we like them? They're only a 10% premium to the market. But what are you getting? You're getting better growth, better balance sheets, stability with an AI kicker. So what's not to like?
So the Magnificent Seven that we talk about all the time, they would be the bell cows of these stocks.
Yeah, I would say that's a fair thing to say. I wouldn't use that term, but yeah, bell cows.
Why wouldn't you use that?
Because he made the other term up. Why would he use that term?
I prefer cowbell.
Nothing against cows here, right?
Nothing against cows.
Okay, good. So you like them in terms of their valuation compared with the market generally, and you think their growth prospects are better.
Yep.
How do I buy them? Do I just buy them individually, or do I buy an ETF in them? What?
I think you buy them individually. You can buy, there's not a whole lot of ETFs that are very liquid that cover these, so you do have to buy them. Probably a better way to do it is individually because there is a ton of liquidity. But at the end of the day, what I think is many people already own a lot of these stocks. And really, this is more of an institutional. A lot of people talk about small caps, mid cap, large cap. And really what we want to do is we want to bias it to these large caps, because that's where you're going to get a lot of your bang for your buck, and that's what's going to lead the parade.
Questions from the table for Chris. Anything?
Sure. Jackson Hole. What should we be looking for? What should we expect, and what should we fear?
So I think it's going to be a complete nothing burger, right? What the Fed is going to say, or what the Fed should say, and what I think the Fed will say is they're going to stick to their narrative. And their narrative has been rates are restrictive enough. They just haven't been restrictive enough for long enough. If they keep that narrative, everything's fine. Then what we're going to see is we're going to see uncertainty come down, market probably rallies on that, and we move on. And then we start looking for the calendar, we start to look to earnings season in September, and then we start to look at growth for 24.
Why don't you give us your just the market call, just top down. So you know the Uber cap stocks. So what do you think about the market?
So let's give you the short term. So what we were looking for is we were looking for rates to firm, and that would firm the equity market. We saw that. Right? Our price target is 4,400, but we do think the market can get up to 46. So our trading range is 42 to 46, but we think it gets overvalued for a period of time. That said, once we get to if we get to that higher level, we want to really start to downshift because we don't see this great opportunity for next year. We just don't see a ton of growth. And at the end of the day, we think you can make a ton of money in Uber caps, but it's for a short period only.
Uber caps, your year-end target is 44.20. Right now, we're at 44.36. So basically,
we're there. So what we're saying is we think it can go overvalued. We think you can get up to 46. But once you get to 46, what you need to get things higher than that, you need a really, really strong recovery in 2024. And we just don't see that.
But the argument that you make is that these Uber caps among the S&P 500 would be the place where you could get some excess return.
That's right. Because, again, they have better growth prospects, better balance sheets. They're more stable. You have that AI kicker. And a lot of these names are still under-owned by the institutional set.
All right, Chris, it's nothing you said. I'm going to turn to Guy for reaction.
No, I mean, and Chris might agree with this as well. There could be a scenario where the market goes sideways to lower, and his scenario being in Uber caps work. What we've seen over the last couple of years, when the market does get a little squirmy, you've seen this flight to quality in all the names that he talks about. So even if the market does nothing, that might work.
Katie, what do the charts say to you about where the market's going for the rest of the year?
You know, the leadership tends to lead when we come out of corrections, right? So we see defensive sector rotation during corrective phases. That's arguably what we have right now.
Are we in a little corrective phase now?
We are. We are. Not today exactly, but we are, in our opinion. But you do tend to see these large caps, the heavyweights that comprise technology, communication services, right, consumer discretionary, all tend to outperform coming out of these down cycles. So it makes sense to me, and I think you've come up with an idea for an ETF as well.
There you go.
Yeah.
We'll call it the Ubers, right?
We'll call it the
bell cows. The bell cows.
There might be a copyright issue there, but
I wonder if there's a way to squeeze out incremental yield by kind of having it relative value against something else. So either concentrating this investment in these Uber caps and then selling the S&P against that, or picking a pocket of the S&P, perhaps retail, that you're less bullish on, and having some short there. I just think that being that these names are underinvested in, it's hard to chase at these levels without at least freeing up cash somewhere else. And so like that would be something that I'd want to look into.
Cool.